The exit poll Khol seems to be that the BJP will not just win the Lok Sabha elections but will do so in style. NDA is looking to secure around 370 seats, way above the halfway mark of 272 and better than the 353 count in the 2019 elections. Now, exit polls generally get the direction right, but in the past have tended to underestimate the victory margin by around 50 seats or so. For instance, compared to 353 seats that NDA actually ended up winning in 2019, exit polls had predicted on an average around 306. Today's Chanakya and Axis My India polls have historically been the best predictors, and their verdict this time is that NDA has the chance to go 400 just about par. And while most exit polls do not give party level breakup, if we assume say 60 or 70 seats for BJP allies, then that places BJP at around 330 seats if not more. Again, well above the 2019 haul of 303 seats. Geographically speaking, BJP has hit the ball across the stadium. The top 5 states in terms of seats are Uttar Pradesh, Maharashtra, West Bengal, Bihar and Tamil Nadu. Now, within these, for UP, Maharashtra and Bihar, the NDA is in pole position. In West Bengal, it is seen to be edging out the TMC. In traditional BJP strongholds, MP, Rajasthan, Gujarat, Chhattisgarh, Haryana, Assam, etc., the BJP lotus has bloomed large. Karnataka too seems to have escaped from the grasps of the Congress party despite them running the state government there. BJP's alliance with TDP and Jan Sena in Andhra Pradesh seems to have paid off, and they are looking to unseat YSRCP. In the south, where BJP has traditionally been weak, it seems to have made inroads into Tamil Nadu and Kerala. So what do these results mean? Well, if these exit polls turn out to be true, then this represents a massive pro-incumbency wave. Despite people saying that unemployment is a problem, Mehngai is a problem, all this talk around India becoming a dictatorship, the unease around communal issues, the narrative that the government is in the pockets of rich industrialists, despite the Congress manifesto promising literally lakhs of rupees to the poor, despite all of this, it seems that the opposition alliance has been unsuccessful in offering a better alternative to voters. And look, these are only exit polls, so let's not judge a book by its cover. The results will be declared on 4th June, and that's what's ultimately going to matter. But for financial markets, these exit polls are likely to be a big relief. Markets are actually big BJP supporters for a simple reason. BJP seems to have the economic vision for the country that will help make them money. That vision includes spending a massive amount of money upgrading India's infrastructure, cutting down on subsidies and run-of-the-mill expenditure, keeping inflation under control and making it easier to open and run businesses in India, encouraging foreign investments and putting serious government weight behind India's manufacturing sector so that while US and China play tariff wars, we are actually able to divert some of those global value chains through India. It's not a vision that Congress or any other political parties have been able to put forward. The opposition plank today comprises broadly of 2 fundamental offers. 1, we will give you a lot of money, so vote for us. And 2, we are not BJP, so vote for us. That's not really a vision. That is a sign of desperation. And if exit polls are correct, then their survival becomes a big question mark. Will their party workers and leaders jump ship like some of them did before elections? Will some of the parties that are currently part of the India alliance throw in their lot with the NDA? And to some extent, it is a loss for India that a weak opposition just got weaker. As for markets, well, India's macro news has been pretty good of late. GDP growth in FY24 was in excess of 8%, over around 7% growth in FY23. Inflation is below 5%. Core or demand side inflation is in fact at around 3%. Both fiscal and current account deficits are under control. Foreign investors that were showing some signs of nervousness before elections should breathe easy after such a convincing mandate for the BJP. The question, of course, is what Prime Minister Modi intends to do with this huge mandate. Yes, India needs more infrastructure investment, as the government has rightly been doing so far. But it also needs the private sector to start investing in a big way. If these exit polls are correct, then BJP will have the legislative mandate to reform some of the most difficult parts of our business landscape, archaic laws around factors of production, like land, labor, or agriculture. The latest GDP data shows that even as GDP growth last year was over 8%, private consumption, that accounts for over half of our economy, is growing by half that rate of 4%. Underemployment and the lack of good quality jobs remain a challenge for our large working age population. So there's a lot to do. And the focus just after election results are declared will be on what the new government intends to do in its first 100 days. And the final union budget that the government will present after the new cabinet is formed will be the first official indication of what the government has in mind in terms of its new agenda. So we had an interim budget in February where the government slashed fiscal deficit target from 5.8% of GDP last year to 5.1% of GDP for this year. And the new government now has a choice whether to continue with it or, announce a new target for the final budget. Two important developments have happened since then. One, the RBI has transferred a record amount of dividends to the government. We've in fact done a bond economist video on this. So the government has now around 0.4% of GDP worth of extra money to play around with this year. So if it wants, it actually has the ability to reduce the 5.1% of GDP fiscal deficit target that it set in the interim budget. And two, Standard & Poor's, a global rating agency, took the first step in fast-tracking India to get its first sovereign rating upgrade in years. A lot of that is dependent on the government maintaining and committing to fiscal discipline, and India maintaining its fast pace of growth. And if the government were to cut fiscal deficit in the final budget, it would mean cutting the amount that it will be borrowing from the market, which, all other things remaining equal, will mean that there will be downward pressure on interest rates. The next few weeks will see not just the country, but also markets and foreign investors closely monitoring this intricate play of politics and economics. To make sense of it, stay tuned to The Bond Economist.